This video is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC and Felix Fry are not registered investment advisors. Options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Okay, today's trade is on a uranium company, CCJ. Let's take a look. So here on the home page, and usually I'm going to start here. I might even go here sometimes and click on RV, which is relative volume. So I want high volume and click on IV up, which is going to give me all the options that have higher vol changes today, which means demand. There's some demand here. So higher demand and relative volume higher than usual. I have a list here. I can look at that and you can find interesting things there. But generally, I start here. These are the biggest trades of the day here. Largest open interest changes from Friday. So I'm going to look at 100 results. I'm going to look for greater than 2 weeks. And let's just start with what's on the ass, see if I see anything interesting. And top one here is CPRI, Capri Fashion Company. They like Versace, I believe, Michael Kors. CCJ, Uranium Company, the 37 calls. Buying them here, sweeping, 10,000. Volume, open interest, 25. He sold these last week. He sold them. Looks like he's coming back to buy them again. Stock is up. And I actually see it here again, 5,000. So I'm going to look at CCJ here. And the volume is 11,000 on this contract total. So these are total contracts on these strikes and this expiration. So for example, 11,169 traded under 37 calls, 2,007 of the August 11, 34 calls traded. Okay, that's not all in one print. This is cumulative. So I see that. This is just giving me a bigger picture look, biggest strikes trading, 11,000 here under 37s. I know that they were buying them and then they sold them last week. We can see here, let's see what happened. So see here, this is what I saw last week, August 3rd, Thursday, 19,000 traded, and the open interest switched the next day. So he's long these, he sold them. So it looks like he's buying them back today, trading them on the offer here. So here we are. Here are the two prints just to check. 941, 945, right off the open. Stock trading 34.38 and up 85, 88 cents. And he paid 75 at 41, 941, and then he paid 78 at 945. That's clearly someone that's coming in, taking an offer. And then you can also double check here. The IV was up and then it was up. So shows that price went up on the option, and implied volatility also went up, which is a reflection of a buyer. Earnings are on October 31st. They came out with earnings last week, which is not really the story. The story is clean energy longer term. The only solution is nuclear in many people's minds, and chemicals at the center of that thought. So we have CCJ here. This is a weekly. Again, I'm always looking first at the weekly. Let's just try to annotate this here a little bit. So this is a wedge that we've been looking at for a while. We've played CCJ for a while here. We played it all over here. We were 20, 21, call buying, we were buying. Playing around here a little bit, stopped in this area because this became apparent, this wedge. And this wedge is going to hold on a weekly. It's pretty strong, and it's going to hold this between this band until it breaks out. So we've been waiting for the breakout, and we got it here. Use red to show that breakout here. Okay, so we got this breakout, and then it became interesting to get long again. It reached here 33, came right back to the breakout level, and then took to this downward trend line, and then took off here. Stock is trading great on a weekly, longer term, but let's take a look at what's happening on a daily basis. We see here, same thing, that downtrend is coming here, but it's looking pretty good. I mean, the 50 days moving higher. So we can see it. The 50-day is moving higher, and it's starting to make these higher highs, higher lows. So pretty good. This is a pretty good trend line here. Little channel, and it broke out of that very long term wedge. In technical analysis, the longer the wedge that's in there, the better it is when you get a breakout. So if you have a wedge that's a month and a half long, it's one thing. But if you have a wedge that's 2 years long and you break that wedge, it usually is, it should give you better confidence to sort of take the trade, and either if it breaks down, then somehow short it, or if it breaks up, then get long. One thing I look at is uranium prices, and this is a 5-year chart of uranium prices. They don't trade like all the other commodities. They trade like on a contract basis, like almost a monthly basis. But you get these prices here, and you see 2020 just took off and hit the highs in 2022 in the spring, has come down, but has held this sort of high 40s, 50s. Now it's flirting with the call it 1.5 year high here at 57, 58. There's news out of Niger and military coup with France, and that gave it a little boost last week. But the other backstory, you should look it up, is on the Sprott ETF. So they came out with an ETF. I want to say somewhere around here, actually, probably this bump here, but somewhere around here, where they came out with an ETF to buy uranium, physical uranium. And so the demand in that ETF could actually take out a lot of the supply of uranium that's needed to be in use. So that could continually drive prices. So you have that in the background, way background, on a potential just demand from people buying the ETF, and that taking out some of the supply, which would then cause prices to shoot up on top of the demand for potential clean energy. So that's the dream scenario for the longs. But the chart looks great. It's hanging in there, and this guy coming back here to buy these calls. So if we take a look at the 37 calls, we see the RR dollars 39.85, 39.85. Okay, so 39.85. He's got to do better than 39.85. He's got to be thinking higher than 39.85. And let's see if we can go back on a weekly. Let's take a look at where our lines line up here, our trend lines. If we're going to look at something like this, where our target is, so we said 39, so let's call it $40 on the RR dollar. And, you're talking about over here, this is going to be close to, it's off the, so 35 to 40. So by the time it gets to August, 5 weeks, I mean, you're talking about the top of the chain. So he's expecting something here, some sort of announcement, a spike in prices. There's no earnings, so it's not an earnings thing, but maybe there's government regulation coming. There's going to be an announcement from the government. Maybe some of the stuff that's been through Congress gets put front and center again. But he's playing something in September here. I don't know what it is. I'd have to take a further look. But keep in mind, he's looking for prices toward the upper bound of this dotted blue line. All right, there you go, CCJ. Make sure you smash the like button, comment, ask questions. I'll see you tomorrow.